This video is for educational purposes only and should not be considered financial advice. Refined mitigation block strategy. Outline, intro, new update, the strategy, trade execution, and recap. Intro. In this video, we're going to go over a refinement to our understanding of mitigation blocks, and then demonstrate a strategy that will take advantage of this new update. The new update. Previously, when identifying a mitigation block, we used to wait for price to close beyond the origination of the mitigation block to confirm a valid entry. But now we've discovered something interesting. Instead of focusing on the first level of the mitigation block, you'll want to shift your attention to the second level. Once price closes beyond this second level, that's where you'll be looking for your entry. This subtle refinement changes the way we approach setups and gives us more precision in execution. We see we have a low, high, and a lower low, or what can more accurately be described as down close candles, up close candle, and down close candles. We draw our mitigation block from the top of this set of down close candles. That's when we look for price to close above it and then dip back below it. Once we see the move back up, that is the entry point. The strategy. Now let's talk about the strategy that takes advantage of this update. Here's what we're going to do. First, identify a higher time frame mitigation block. Let's use the 15-minute chart. Once you've identified this mitigation block, you'll wait for price to dip into it. But don't enter the trade yet. Instead, we're going to drop down to a lower time frame, the 1-minute chart. Here is our 15-minute chart where we have a high, a low, and a higher high. Then we draw our line to indicate the mitigation block. Once price closes beyond that line and then retraces back into it, we're looking for an entry to the downside. When we see price reach into a 15-minute mitigation block during an ICT Killzone, we move to a 1-minute chart. Remember, the ICT Killzone is where we're looking for our trade entry. Then we look for an ICT unicorn trade and enter when price dips into the fair value gap. For a clear description of the ICT unicorn trade, see our previous video. A link will be posted on the top of this video. Here we have a 1-minute chart, and we see price dip back into this 15-minute mitigation block. This is during the New York Open on Euro USD, and this is our 1-minute chart. We see a mitigation block was created, and then a fair value gap was created over top of this mitigation block. That is a unicorn trade. Once price enters that fair value gap, that is your entry signal. And we have our entry here when price closes outside of that fair value gap. It also closes below the 5 EMA. Trade execution. Let's take a look at some examples. Here we have the NASDAQ 100 15-minute chart. During the previous session, we have a low, high, and a lower low, or as we said, a down close candle, a set of up close candles, and a set of down close candles. Once they close below this candle, this creates the mitigation block. Then during the Asian session, price retraces back to it. It doesn't hit it exactly, but let's look on the 1-minute chart to see if there's an entry. Here we see that set of down close candles, and we see a mitigation block. Then price makes a fair value gap over top of this mitigation block. That creates the unicorn trade. Once price dips back into that fair value gap, that is the entry signal. Now price does come back into it and goes below, but again your stop loss is below the mitigation block. In this last example, we see a low, a high, and a lower low created. Once price closes above this mitigation block, we're looking for an entry below the line we drew on top of the mitigation block. On the 1-minute chart, we see again price closed above that 15-minute mitigation block, comes back down, creates another mitigation block, and then a fair value gap engulfing that mitigation block. That is the unicorn trade. We look for an entry once price dips back below into this fair value gap. Now, one caveat about this trade, it happens after 12 noon. Normally, you would not take a trade after 12 noon. However, this comes 1 minute after 12 noon, so you may consider still taking the trade, but putting less risk on. And as you see, price does go below and then heads right back out of that fair value gap to the upside. To recap, identify a mitigation block on a higher time frame. Wait for price to dip into that mitigation block. Drop to a lower time frame during an ICT Killzone. Look for a unicorn trade setup to get your entry. This approach provides you with more precision and helps filter out false signals by aligning multiple factors for a strong trade entry. This small refinement can make a big difference in your trading results. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more trading tips and strategies. Don't forget to hit the notification bell so you never miss an update. Until next time, happy trading.